Hey there, random internet strangers. It's Random Crypto Guy here with my belated dollar cost average beast mode strategy signal. Today is Monday, 6 June 6th or June 7th, 2021 at 4 o'clock in the afternoon Eastern Standard Time, New York time. And I'm going to give out two signals today. I'm going to go a little bit quicker and do things a little bit more condensed today because there's a lot to go over with these signals. Two reasons I want to do this. One, to show you some changes as far as going from putting money into the buy the dip bucket versus taking money out of the buy the dip bucket, because that happened between yesterday and today. And so what I'm going to do is give out signals for both yesterday. I missed yesterday because I was in Miami having a great time over there with the conference. Real excited about a lot of the opportunities that are happening in the Bitcoin space. So like I said, I want to condense this. So we're going to go straight to the calculator, and I'm going to call out I didn't have time to write the numbers down and put them up on the screen. So if you got a pen and paper handy to put them down, I will go over them slowly so that you will be able to write them down. Okay. The signals for Sunday, that's yesterday, June 6, 2021, at the candle close for Bitcoin. This is for Sunday's signals. The DCA is 100%. That means you're going to take 100% of your DCA and purchase Bitcoin with it. The buy the dip escrow is minus 12. What that means is that we've been taken out a lot, but each time that amount gets smaller and smaller because we've just been kind of leveling off at this point. So you are going to take out 12% of your whatever's been in your buy the dip escrow and purchase Bitcoin with that. And that's today. And the all-in signal is 0. That means we're not going to put money into the all-in, and we're not going to take money out. Neither one of those are going to happen today. Okay. For Ethereum, the DCA is 94.9%. That means your dollar cost average is 94.9%. So whatever your dollar cost average is, you're going to take 94.9% of that, and we'll do all the calculations here in a second, and purchase Bitcoin with that. The buy the dip escrow is minus 55.4%. That means whatever is still in your buy the dip escrow. Remember, we've had 2 weeks in a row where we've taken money out, but there's still always money left because that amount is always goes back to 100%, and then we take 55.4% of that out of the account and purchase Ethereum with that. And the all-in bucket is 5.1%. What that means is that you are going of your dollar cost average, the amount that you put in every week, we bought 94.9% in Ethereum, so the remaining 5.1% goes into the all-in bucket for when we're ready to purchase crashes. Okay, so that is Sunday signal. So now let's go over how to calculate that for all the newbies, and then those of you can skip ahead if you already know this. You can skip ahead to Mondays here in a few minutes. I'll try to make some type of marker. So the DCA, in our examples, we all use $100 as our DCA. That's how much money we can put week after week on a consistent basis, and it's not affecting your rent, your mortgage payments, your electric bills, food on the table, things like that. You want to still live your life. It's just think of it as a savings account that you're going to put away. But in our examples, we're going to use $100 as always. So $100. 100% of $100 is $100. That's real simple. So you take 100 times 100%. I know this is super easy, and that equals $100. So you'll take that whole amount and purchase Bitcoin with it today. Now the buy the dip fund is minus 12%. Now we've been buying, normally we put money into this account depending upon the signal, but we've been taking it out because the prices have been suppressed. They've gotten lower. So we're going to take 12% of whatever is left over, and we're going to take that out. But in our example, I always like to use $1,000 because the first dip into the bucket is usually the biggest. So $1,000 times 12% equals $120. So that you would take $120 out of that bucket and purchase Bitcoin with it today. That's what the minus means. Minus means we're pulling out of the bucket, plus means we put into the bucket. Keep it simple. And the all-in is 0, so that's, we're not putting money in and we're not taking money out. But just to show you the quick example, we have our $100 times 0% equals 0. So we're not putting money in, or are we taking money out? And the all-in signal is on average about 2 to 2.5 years. That's to buy the market crashes. We have one bucket to buy the dips. That's to buy the fucking dip. And the all-in account is to buy crashes, absolute, devastation. Which this was pretty close. This last correction was pretty close to an all-in, but we did not get an all-in signal, at least not yet. There's still an opportunity and a chance where that might happen. So moving on to Ethereum real quick. I'll try to run it through it a little faster. Once again, we use our example $100. That's how much we can set aside every week on a consistent basis. The Ethereum DCA signal is 94.9. So we take $100 times 94.9%, and that equals $94.90. So we're going to, our $100, we're going to purchase $94.90 worth of Ethereum today. Okay, and the by the dip is minus 55.4%. So we'll clear that out. And once again, I like to use 1,000 as our example, because in the first dip, we've taken out 3 weeks in a row. We've taken out of this bucket, and like I said, each time we take out, we don't take out the whole bucket. We don't empty the whole bucket. We'd only take a percentage out, and then whatever's left over, that becomes 100% at the end. That the bucket is still considered full. So I like to use 1,000. So 1,000 times, what was it? 55.4. 55.4% equals $554. So you're going to take $554, pull it out of the buy the dip bucket, and purchase Ethereum with it today. And the final is the all-in signal, which is 5.1%. So that goes back to the DCA. So our DCA is 100. That's our DCA bucket. 100 times 5.1% equals $5.10. So you can see right here we had $94.09 to purchase Ethereum. That left $5.10 to put in the all-in bucket. And we're not putting anything into the buy the dip bucket. We're taking money out, and we're going to get to a point to the Monday signal where we'll put money into that bucket. So I'm giving you two signals, one for Sunday and one for Monday, and you get to choose which signal, but don't mix up the days of the week. Pick one day of the week, either Sunday or Monday, and you can use either signal, and you'll be fine. So, because remember, it's a long-term strategy. It's not perfection. It's about lowering the average of your dollar cost average. So that $5.10 is going to go into your all-in bucket. You're not going to touch that and any subsequent additions to that bucket until we get that market crash signal. So let's move on. Now we're going to go to Monday. Monday is going to be a little bit different because now you can put money into the buy the dip fund with Bitcoin. Not with Ethereum yet. We're getting close, but with Bitcoin, as so far for Monday's signal, that's today. And I'm giving you the option to choose between Sunday signals, which we've just overgone, and Monday signals. Let me put a marker in here for Monday signals. So let me go and do a flash here or something. Flash back and forth real quick. This is just to let people know that it's a marker. Real high budget here. I put all my money into dollar cost averaging. That's why I don't have a big budget. So for Monday signal, the DCA signal is 58%. So that means we're going to take 58% of our dollar cost average and purchase Bitcoin with it today. And in our examples, we like to use $100. That might be different for you. It might be $20. It might be $2,000. It might be $178.42. But the point is that you're just going to take a percentage, and it's something you can consistently do the same amount week after week. That's the key. So 58%. So in our example, we use 100 times 58% equals $58. So we are going to take $58 of that $100 and purchase Bitcoin with it today. The buy the dip is positive plus 42%. So this is where it gets different now. So you see, we took 58%, or 58% of our DCA to buy Bitcoin. Now we're going to start putting money back into the buy the dip bucket. That money is at 42%. So it's a positive number, so that means we put money in. So we take our $100. We're not doing the 1,000 because we're not taking money out. We're doing the 100 because we're putting that DCA in. So $100 times 42% equals $42. So you're going to take basically the remainder of your DCA and put it into the buy the dip fund, or the buy the dip bucket. And so when it dips again, we got that $42 plus whatever is left over from the previous days, and we got that money to purchase dips. So that's $42 that's going into that account. And the all-in signal for Bitcoin is still 0. So 0 is 0. We'll skip over that. So we're not putting money into all-in, and we're not taking money out of all-in. Ethereum. Ethereum is we're still in the buy the dip phase. So we're still taking money out of the bucket for Ethereum. So the DCA is 96.6. So we take our $100 times 96.6 equals, whoops, forgot the percent. $100 times 96.6% equals $96.60. That's how much Ethereum we're going to purchase today. Whatever your DCA is, 96.6. The by the dip signal is minus 33.6. So remember, a minus means we're taking money out of the bucket. So, and in our example, I like to use 1,000 because we can build up a big fund in that bucket to purchase these dips, especially if there's a long time in between dips. So that is, what did I say? 36.6. So 1,000 times 33.6% equals $336. So we will take $336 out of the bucket and purchase Ethereum with it today. And then the all-in signal is 3.4%. So we take our dollar cost average, $100, times 3.4% and that equals $3.40. So that's going to go into the all-in fund. So that filling up that bucket, so when the market crashes, we have that full bucket to dump onto and purchase Ethereum with it over time. And then, like I said, those add up over time. That $3 here, $5 there, $8 there. That all adds up over time. Over 2 years, that can add up to thousands of dollars, maybe even tens of thousands or more, depending upon the size of your DCA. So that is that. I will go talk to the numbers one more time. For Sunday, June 6th, the DCA for Bitcoin is 100%. The buy the dip is minus 12, and the all-in is 0. For Ethereum, the DCA is 94.9. The buy the dip is minus 55.4. The all-in is 5.1. For Monday, now like I said, you can use those signals. Don't mix up Sunday and Monday. Use either Sunday signals or Monday signals. These are Monday signals. For Monday signals, Bitcoin is 58% DCA. That's the DCA is 58%. The buy the dip escrow is positive 42%. That means you're going to put money into the bucket. So you get a choice here between Sunday and Monday. You can take 12% out for Sunday signal, or you can put 42% of your DCA in. That's why it gave you a choice. And the all-in signal is still 0. For Ethereum, the DCA is 96.6%. The buy the dip is minus 33.6%, and the all-in is 3.4%. So 96.6% we purchase Ethereum today. The buy the dip fund, we take 33.6% out and purchase Ethereum today, and the all-in, we put 3.4% of our DCA into the all-in account. Clear as mud, right? I'll have it written up on my my Twitter page, on my pinned tweet. Just a quick look at the charts. The Bitcoin daily chart, we got a nice little positive slope on the upward, and it's going upwards on the buying pressure, but we still have selling pressure waning, but nothing's turned up yet as far as having a higher high yet. And these two orange boxes right here, you see this orange box here, this orange box here, those are turncoat supplies with nested supplies inside. That's going to be very difficult to get through. So that's the challenge, is breaking through this first box in particular. So for a while we're still probably going to be ranging around in here. For Ethereum, looks a little stronger though. We got much stronger buying pressure. The slope of the lows is much higher. This over the daily chart, and the selling pressure is leveled off. We haven't got a higher high yet, but we have two about the same. Well, this is slightly higher actually, just a tiny bit. So we do actually have a uptrend in progress on the daily, albeit it's kind of ambiguous, kind of vague, considering this this supply area right here. We got to bust through this in order for this to get to what I would consider it an uptrend. Until we bust through this supply area, I don't consider it an uptrend. So that is, well, let me go over the dollar. I want to show you something about the dollar here real quick. You know, the dollar has been flirting with these support levels again. I remember this is the weekly chart, and a couple months back I was talking about the thin blue line where we needed to bust through this in order for Bitcoin to take off really big. A weak dollar means a strong market, and that includes Bitcoin. So we once again have the thin blue line. All the monthly and the weekly have bunched up together. So that is a sign of strong support. But the weakness is that it didn't bust through this area up here. This is long-term stuff. It barely, I don't even think it touched that area. It might have touched, yeah, I think it touched it and then was rejected. So we might see some more bouncing here before the floor drops out. With all the extra inflation, that's what inflation does. It reduces your purchasing power. So, and this is more just is the dollar the cleanest shirt in the dirty laundry hamper? That's basically what this is measuring. And so far, it's kind of in the middle of the pack right now. It's why we see this ranging back and forth and not like these big downward movements where the dollar was just tanking. Gold is still on a tear here, week after week, doing pretty well, knocking into supply though. Gonna have some trouble getting through that. Same thing with silver. We got bunched up resistance lines plus huge supply area up here. So that's all I have for today. Thanks for stopping by, and I will have it written for you so that on my Twitter page in case you didn't quite understand what the numbers were. All right, thanks.